is step 5, preparing adjusting entries. Deferrals is advance cash payment. Here, we have expenses paid in advance for asset, then revenue payment received but not yet delivered or provided as a whole to the customer. So this happens when, for example, a customer paid us in advance for our service. So there is an advance cash payment in the point of view of the customer. We have received the payment. Then as the business, paid in advance a certain someone or business for an acquired prepaid expense or asset that will be used for the next accounting period. So this is the scenario. Now, on the deferrals, let's discuss first expenses paid in advance, which can be claimed or considered as an asset. So as the business paid someone or a business for the acquisition of a certain prepaid expense or asset. However, we can record these adjusting entries in two methods. We have asset method and expense method. Under asset method, we recognize the prepaid expense, the one we have paid for, as an asset because we will be using the item we have acquired in the next accounting period. And then the adjusting entry will report the portion that were used up. In expense method, we will recognize the payment of the expense as an expense itself. And then on adjusting entry, it covers the period of what was left. So to better understand this, here is our example. On August 31, 2020, paid 60,000 for advance rental payment good for 12 months. So meaning to say we have paid a certain broker or a certain agent or a certain establishment 60,000 pesos cash. This is for the rental payment good for 1 year, 12 months. It is on August 31, sorry. Now, I will show you how to journalize and prepare adjusting entries using asset method and expense method. So let's first journalize the transaction August 31. Under asset method, it will be recognized as an asset. So debit prepaid rent because it is a rental payment. So prepaid, binayaran in advance. Debit prepaid rent, then credit cash because we have decreased our cash. Then under expense method, because we are to recognize the action or transaction as an expense, so debit rent expense, then credit cash. Now for the adjusting entry in December 31, 2020, under asset method, we have rent expense debit. It represents the amount of the rent that were used up, that's why it's an expense. Then credit prepaid rent because it's a decrease in our prepaid rent, because that when we say prepaid, bayad na in advance, then we have used up a portion of that, meaning to say we are decreasing that certain asset that we have paid for in advance. That's why it will be credited. Then the computation is 60,000, which is the actual amount divided by 12 months. So 5,000 per month times 4 months, because the months covered or that were used up is, we will start with September since this is August 31, so August will not be covered. September, October, November, December, 4 months. So 20,000. In expense method, we have debit prepaid rent and then credit rent expense. So under here, we are to compute for the remaining months of our rental payment. So 60,000 divided by 12, 5,000 times 8 months. Why 8 months? Since this is August 31, good for 12 months, so we will start with September up to August 31 the next year, 2021, and we have consumed up to December, so we will start counting with January up to August 31 the next year. Here under asset method, we are counting months that the rent was actually used up, so September, October, November, December. Here we are counting the months that remaining with the advance payment that we had. So we will start with January because we already used up September up to December. So that's how to compute the number of months in adjusting entries. Now, if I were to choose from these two, I prefer actually the asset method. It is easier for me to analyze when I use the asset method. Again, it depends on the given in the problem. If it requires you to use expense, then use expense. If it requires you to use asset, then use asset method. And another thing is you can identify whether the company had used asset or expense if the first entry is prepaid rent debit, so it's an asset method. If the first entry is rent expense, then it's a expense method. Now another one, revenue cash payment received from customers but not yet delivered fully or as a whole. So this is an advance cash payment from the point of view of the customer. So they have paid us in advance. So we can record this through two methods, liability method and income method. In liability method, we are recognizing the cash advance payment that they had given us that will result to a liability because we owe them the service that they had paid for in advance. In income method, we recognize the revenue as an advance earned revenue. So to differentiate the two, here is the example. On July 1, 2020, received cash payment from John Dewey for availing services for the amount of 80,000 good for 10 months, meaning to say we have received 80,000 and then we need to divide it into 10 months because it is the statement in the transaction. Then we must record first the transaction on July 1. Under liability method, we will record that as debit cash, and then since it is a liability, so credit unearned service income. This is the account title used for undelivered service or natanggap natin yung bayad niya but we did not deliver yet or provided the service to him or her. So liability, and we are using this account title unearned service income for service, unearned sales for merchandising. For income method, since this is recognizing unearned income in advance, so debit cash because we receive cash, then credit service income. That's it. Adjusting entry under liability method, in December 31, 2020, we have unearned service income, debit, and credit service income, then the amount. Now, why we debit unearned service income? Remember, unearned service income is our liability. And from July 1 up to December 31, from time to time, we have delivered the service by month to John Dewey. Meaning to say, from July 1 up to December 31, we have provided him the service that we owe. Although there are still remaining months, but we have provided portion of our needed to provide service. Therefore, we need to decrease our liability to him because we have provided the service. And we need to credit service income because service provided is an indication that we have incurred a revenue. So, an increase in revenue following the normal balance, credit, revenue, consonant, so credit service income. That's it. Then, the computation, 80,000 divided by 10 months, so 8,000 times 6 months because July, August, September, October, November, December, 6 months. We have delivered the service for 6 months, 48,000. Then, multiplying 8,000 by 6, so 48,000. On the other hand, income method, we need to debit service income and credit unearned service income because we are counting the amount that we still owe. We have a liability to the customer. So for that, we have 80,000 divided by 10, 8,000 times 4 months because since this is a 10-month transaction, so July up to April we can finish the transaction in April the following year. So we already used up until December. We have already delivered until December. So we still have January, February, March, April, 4 months, the remaining months. That's why we use 4 months, so 32,000. Now if I were to choose again between the two, I'll choose liability method. So for me, an advance cash payment from the customer is really a liability because we need to comply. We owe him or her the service he or she deserved because of the advance payment. But again, it depends on the instruction in the example. And also, if you have encountered in the general journal the unearned service income, meaning to say it follows a liability method for that specific example. And then if the transaction is an advance payment but the entry is cash and service income, then it is an income method. For supplies on letter B, supplies on hand amounts to 3,720 from the original amount 5,000 pesos. So this is the simplest adjusting entry. Just subtract the two to get the amount of supplies that were used. So 5,000 minus 3,720 remaining. So we have used up 1,280. That's why we will use supplies expense because it is a portion of supplies that were used, 1,280, and we have to credit supplies since supplies is a debit, has a debit normal balance. If it increase, debit supplies. If it decrease, credit supplies. So that is the adjusting entries.